Hi, my name is Jeff Mandel, and I'm the President and the CEO of the iQual Corporation and the ApprovalGUARD service. I'm here to provide you your quick credit tip. So your customer is ready to buy that new home, but is their credit profile really strong enough to ensure that they can get approved for their mortgage? Banks and other creditors have begun to be much more restrictive about who gets approved for new credit and which consumers get the preferred interest rates and products, better known as risk-based pricing. With the majority of mortgage applications actually being declined today, combined with the impact the quality of your customer's credit profile has on the interest rates they have to pay if they do qualify, there's a need for every one of your customers to more proactively prepare. Both you and your customers want to avoid surprises. The difference between a home loan with a low interest rate and one with a risk-adjusted higher interest rate can mean hundreds of dollars more per month in payment and thousands more in interest over the life of your loan. The reality is that everyone who wants to not only qualify for a mortgage, but improve their potential for getting good rates and lower payments on a home loan needs to spend some time preparing and potentially readjusting the way they manage their credit. Here are some simple first steps to consider. Step 1, understand how credit really works. 94% of consumers are challenged with understanding the basics and truths of how personal credit works to assure they have the best credit and debt profile possible. In most cases, they build credit over a lifetime of trial and error. Even if your customer believes they're knowledgeable about credit, the constantly changing credit environment, combined with the lack of transparency about the accuracies of how credit really works, creates a situation whereby everyone can use a trained credit advisor to help be their second set of eyes and help them navigate the challenging landscape. Step 2, continually evaluate and monitor the health of your current credit profile. Once your customers have enhanced their credit knowledge, it's really important to evaluate their current credit and debt profile and then establish a plan based on their short and their long-term credit needs. A continual monitoring of the credit report and profile is no different or less important today than getting the physical exam by your doctor. Now, don't confuse this type of monitoring with the automated email alerts your customers get from a credit monitoring service. This is the type of monitoring and advisory service that requires your customers to review their credit for improvement opportunities, take corrective actions, and ensure that the accuracy and suspicious activity hasn't been breached. Step 3, watch for red flags. There are credit profile red flags that can indicate problems are brewing. Watch for things like maxing out your credit card limits, applying for new credit cards in order to survive, overdrawing your checking account, borrowing from friends to pay debts, not opening your bills, and making only monthly payments on credit cards. Step 4, optimize your credit. Each of your customers' debts should be periodically reviewed and analyzed, if possible, with a credit professional to develop an optimization strategy and a plan. Can they pay a little extra the next few months and then pay off or pay down bills one or more at a time? Are there options they can take to improve their overall credit profile so that they can help ensure that they not only qualify for their mortgage, but ultimately qualify for preferred interest rates? Are they able to improve the terms, interest rates, and the duration of how long their mortgage is of their existing debt? Should they consolidate some of their debt? Once they strengthen their credit and debt profile, do they have opportunities to negotiate or obtain lower interest rates that ultimately would save them money monthly on other debt, such as their car loans, credit cards, and student loans? Everyone's situation will be different, but these are all questions your customers should be continually asking themselves in evaluating and preparing to make their home purchase. Let me tell you a little bit about the iQual Corporation. We provide advanced credit monitoring and advisory services that are focused on your customers' financial literacy and wellness through our branded solution, ApprovalGUARD. ApprovalGUARD helps your customers understand, evaluate, monitor, and optimize their entire credit profile, leading to improved credit profiles and credit scores of your customers, and ultimately helping them reduce their monthly interest expenses. You can learn more at www.ApprovalGUARD.com.